Good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Friday, and we're at the 27th of September 2024. This is your weekly edition, so we'll be looking at the weekly charts primarily. Now, we do have some data coming out on Monday, nothing big. What we've got is the September Chicago PMI numbers. That'll come out at Monday morning at 8:45. It's expected around a 46.7 compared to a 46.1 that they had last month. Dallas Federal Reserve, they're going to update their monthly regional manufacturing outlook for September at 9:30 in the morning. Last month's figure was a negative 9.7. So, we've seen a number of the different areas that have come out, and they're not doing better. New York did. That was the surprising thing. And a good thing, but most of the regions aren't. Baker Hughes, U.S. rig count, well, that is down one on the week to 587 in the period ending this 27th, and that's off 36 years rigs from a year ago. The fiscal year comes to an end on Monday, and when we come in Sunday night, we'll get an idea in these markets as to what's going on with Hurricane Helene and how much damage it's doing, because the veering that it's taking is going to hit, like I said, the projections have held Illinois, Indiana, Tennessee, parts of Kentucky, but the corn crop is going to get hit. We have customers, and we know they're racing with their combines to get as much as they can in before these soaking rains come. Once it gets soaked, you got to let the ground dry out. It gets to be difficult. But in all fairness, generally the end of September, October is difficult, and that's just how it works when you're going for the harvest. Now, as I promised everyone, I said that I was going to do a special report on the silver market, and I have. So, the report is done. It's posted on our website already. I've covered for you trend chart analysis, seasonals, price count. So everything is in this report for you. The commentary's there, and it's one of the longer ones that I've done. There's an awful lot at work in this report. I even show you leading up to the election and then after it, what the markets typically do with it. I'm talking the presidential election, of course, coming up. So if you want to see the report, you go to iraepstein.com. It's that simple, iraepstein.com. Or you can move your cursor up here. When you get onto the website, just look in the top left, it'll say Silver Report. I have sent out an email to everybody alerting them to it as well. All right, so let's get into the markets and see what we've got with them. In looking at them, a mixed bag today. The NASDAQ gave up quite a bit. Again, we were looking at NVIDIA fell, and that took the markets with it back into the 120 area. MESZ, which is the S&P, down as well. You were up in the Dow and up in the Russell for a change. In the metals, a pullback, and that's why I did these reports. Pullbacks are what you're looking for. When you take a look at the metal markets, well, the Saudis have come out and done a lot of talking and back-talking, if you will, a little bit, talking about, when they said they want to increase production, well, that could be because other members that had overproduced are supposed to be cutting so they can get more production out in switching it around. They didn't want the market to think it's just production, production, production. Don't know if that'll sell the market or not. Heating oil down a fraction, gasoline down, but your natural gas took off today. I want that gas to take off. You have a seasonal that normally kicks in a little later that's a bit bearish. I question now if we haven't seen, and I said that on the daily charts, that you got down to the area where the markets are ready to bounce, and that's what I think is going on. When we look at the currency markets, you got a little bit of everything. You had the yen up sharply. Why? A surprise who's going to be your prime minister. Not the favorite. It was a real surprise, and this person, unlike the other, is very pro what the central bank is doing in raising rates. So the market looked at that, and all of a sudden you had a big move. Dollar down a minor amount, same in the euro. Big rally day in the Swissy. It's the wild card. It's all over the board right now. As we look at cotton, down a fraction today, and the grain markets were a little bit of everywhere, as you can see, as they're playing it back and forth. Look at that low in in the wheat. And that's a number that those of you that are on my subscriber list, what did I tell you to do with that number? And I got lucky. All right, so let's take a look and see what the markets are. First off, where's the September break? That certainly didn't happen the way I'm looking at it on this chart. So September is going to be a contra-seasonal month. You'd have to have a big market crash to say different. You are up 2.3% for the month. Could you give that up on the last day on Monday? You could, but I don't know what's there to make it happen. Doesn't mean it can't happen. So we'll see what happens. But this was supposed to be one of the weaker months of the year. It isn't. Really simple. When you come on the weekly chart, we added 1.6% this week. So the interesting part for the month, if I come back there, if you think about it, all right, 0.7 took the whole month to get that, and you kicked it up this week by going up another 1.6. That's how you got to the 2.3. Just fascinating when you look at it. But again, the chart keeps holding these numbers. I keep hearing people coming out with end-of-the-year projections that are sharply higher than this. I can understand it because you get the seasonals that kick in, the Santa Claus, and this year you're going to have the Fed has the markets back with cutting of rates. Could there be a disappointment where they go into a pause? It's always possible. They're not going with a rate hike, but we could see a pause. The wild card, of course, is going to be the election, which is a horse race, any way you want to look at it, on November 5th. And I haven't made up my mind what's bullish or bearish for the market. I don't think either are that great. So it just gets to be interesting. I know which one the market would rather have, but we'll see. And I think the market would rather have Trump because of the tax issues and the spending habits of Kamala. But Trump isn't offering any spending cuts. So he's got his own way of going after the taxes and tariffs. It's going to be a hard one. If you look at the S&P on a weekly basis, there's your new high. When you look at the market, you've had a lower low, higher high. That's not a real trend. We're not blind. We can all see the market's gone up to a new high. But this was an easier trend. Higher lows, higher highs, until you took that out and then you corrected and played there. Well, that's what I'm looking for again. I wouldn't be surprised if we get a pullback in this general area. And I say that because you're at the upper Bollinger Band and you rarely stay over it more than 5% of the time out of the universe of times you stay over it. And that's the idea of this algorithm. It gives you resistance and support zones. I am not saying that's an area to go short. I am saying because you don't have an embedded reading, I think the bulls in the market will take money off against that number. If they don't, say la vie. I'm not saying to be short, but give me a break and I'll get interested. What about the Dow? Is it trying to embed? Embed occurs when the red and the blue line, they're called a K and a D line in the slow stochastic. And it's when, let's see if I can get the market, yeah, there we go back. It's when the market from there, what day are we there? We're Friday. Let's see if we can get to Thursday. Is it going to let it go or not? No, it's not going to let me do it. One more try. We'll see if it allows it. I think it will. Nope, it's going up and down instead. So I'm not going to even try that. I've never seen it go up and down, by the way. Higher highs, higher lows. This is more of an uptrend. It's not embedded. It needs another week before that happens. I think that on good breaks in all the stock indices, you're going to have very willing buyers with the FOMO, the fear of missing out. The seasonality that a lot of people waited for on this break never showed up. You know that. I know that. We can all see it. And that's what's going on. So keep your eye at the 19,512 area. When you come to the Russell, the market's in an uptrend. It is not overbought. It is the weakest of the indices. It can play catch up on you at any time. Again, this fear of moving out, you got to pay attention. How's the psychology of the market going to be right at the very end of the year? That's going to be what traders want to look at. In the 5-year note, you have your embedded reading. So this pullback in the market, I think, is getting bought by the professionals on the weekly basis. I think they would bail if the red line closed under 79. It's at 91. That's a long way off, and what would make the market break? Now you're trying to get your embedded reading in the 10-year. Same way, higher lows, higher highs. I think these breaks are going to get bought. Remember, we had a bullish crossover. You made a new high on this particular run. I don't think we're over. I think you're going to see more. Remember that when the Fed cut happened, the market had been rallying into it, and then it broke down. It's the old buy the rumor, sell the fact, and then traders going, well, the Fed's cutting, the economy's going to get better. Maybe we're putting too much stock into the fact of a big, big cut. The psychology moves around on you. That's very important to remember. In the dollar, I am concerned that the first challenge of the 200-day average could offer a bit of support. I've said that to traders during the week, but I do think you get a good rally here. You hit it again. The market has got an embedded reading. I could make an argument here for under 98. Whoa, that's a big drop. In the eurocurrency, you're up to the upper Bollinger Band, not quite embedded. I needed to embed, and then I get wildly bullish in that market. In the Canadian dollar, higher highs, higher lows. So markets are just moving against the dollar, and that is important to pay note of. Big crazy week today. The day was nuts in the Japanese yen. I woke up and I'm going, what's going on there? And couldn't figure it out. Remember, I get up 3:30 in the morning. And you look at where these markets are, this was a big move today. Just look at the size. Well, this is, the weekly, but 71.10 to 68.40. That's no small move. That's, 250 points is a lot in these markets. But what it's done is the market is fighting its battle at the 100-week average. And I often tell you, you get up to that number, and markets rarely just keep running. They'll fight a battle. That is your battle. If you embed, look for up here. Yeah, maybe the 77 level before it's done. Now, Bitcoin, big story in Bitcoin. Bitcoin has survived this sell-off into Bollinger Bands. It's probably getting ready to catch up with the gold market. That's what I'm thinking. I'm wrong if the market gets back under right here. So let's see if this will, this one's letting me do it. Isn't that crazy? It's chart by chart. They're all a little different. So unless you got back under 52,820, and that's a heck of a ways from where you're at right now, I can see the longer picture is maybe we bottomed out. And that's what I think at this point in time. So the first move I'm looking for, if this holds up the way I think it will, back up to the 71,000 level here. When I'm looking at the differential between Brent and WTI, this is a big week. The markets came back into line with each other. They're right at that 18-week average. It had been the Brent losing, and suddenly the Brent's got some support here. You've gotten the Brent lower highs, lower lows, but you're at this Bollinger Band. Don't be a hero. Selling in the Bollinger Bands, in my opinion, rarely good for your financial health. Obviously, you can do whatever you want. But for me, that's where I think the pros are coming out. And I think they're doing that in WTI. You're down to 66.74. That's not to say you can't go lower. I'm not talking out of both sides of my mouth. But if you take a look at these lower bands, you haven't done real well if you've sold under that Bollinger Band. You didn't do real well if you sold it down here. That's what I'm getting at. In the rebob, still bearish. In the driving season's over. We talked about that a while ago. This is a market I'm more bearish than I am, obviously, in the WTI. So you put it all together, you get a game plan, and remember what it is. Please go to iraepstein.com. You can also click up here. On the top left, you will see on the website, just take a look, hit the metal report, the silver report, and away you go. I'm Ira. Hope you like the report, and I'll catch up with you come Monday morning.